Here's a staggering development in the tech world. Meta has just signed a cloud services deal worth over $10 billion with Google, according to Information's report. This massive agreement signals a significant partnership that could reshape how one of the biggest social media giants manages its vast infrastructure and data operations. But here's where it gets controversial. Such a deep reliance on Google's cloud platform might raise questions about competitive dynamics and long-term strategy for Meta. Is it a smart move towards efficiency, or does it surrender too much control to a rival powerhouse? This is the part most people miss when focusing solely on the headline sum. To provide some context, cloud agreements of this scale typically involve providing computing power, storage, and AI capabilities essential for Meta's various platforms, including Facebook, Instagram, and WhatsApp. Such services are crucial for handling enormous user data traffic and powering advanced features like augmented reality and real-time friend recommendations. Now, shifting gears, it's important to look at the disclaimer tied to this announcement, featuring TipRank's Smart Score, back-tested performance details. The essence of this disclaimer is to remind readers that past theoretical results derived from modeling aren't a guaranteed predictor of future outcomes. Backtesting involves applying a specific strategy retrospectively to historical data, but it often comes with lots of assumptions about market liquidity, security purchases, and economic conditions, all of which may not hold true in real-life scenarios. For example, the models assume a company could always buy the recommended securities without impacting the price, but in reality, markets can be quite tricky. Additionally, the strategies tested could have been tweaked repeatedly to maximize past returns, which doesn't necessarily translate to strong future performance. This highlights a crucial point. Backtested results, while useful for illustration, lack the unpredictability and actual decision complexities that come with real trading environments, including transaction costs, fees, and emotional factors. And here's a subtle but important detail. These backtest figures often disregard the fees and costs that actual investors would face, so the net returns might look very different. Plus, any dividends or income are assumed to be reinvested, which is an ideal scenario that might not always be practical. So, while the headline about Meta's $10 billion cloud deal with Google is undoubtedly huge news, fully understanding the technical and financial disclosures, such as the limitations of backtested data, is essential for investors and tech enthusiasts alike. Are you convinced this move signals a strategic leap forward, or do you worry it cements Meta's dependency on Google? We'd love to hear your thoughts. Do you see this as a game changer or a potential risk? Join the conversation below.